At what point do you see the dollar and the treasury yields rising? Will the Fed eventually lose control of the yields, or is it a long-term general malaise call such as we saw in the EU since 2008? So,
well, there was no general malaise. I would not characterize it that way. What happened in the EU is that they lost control of negative interest rates.
I think that's what he's saying.
Yeah,
like
so they've lost control. The Fed is going to lose control here because they've been trying to have this semblance of control. Now, what they're going to try to do, they say they're going to have yield curve control. Not like Japanese yield curve control, where you basically take all interest rates and make them the same across durations. They're going to try to say, well, I'm going to toggle the low end, make sure that keeps going down at the right pace relative to the long end, and I get the right measurement of the curve in between. Well, okay, God called and said that you didn't try. I don't fundamentally believe that these people were put on Earth to bend and smooth economic gravity. Some people do, right? They're well compensated at very large asset management firms to believe that, cheerlead it, et cetera. So the answer is no. Right now they're losing it, right? Bond yields, again, look at today's level on the 10-year yield in that chart. Yesterday it was at 56 basis points, now it's at 52. 52 is below the prior low by a basis point and a half. So once you start breaking towards new lows, that implies that the Fed did not fix the economy. They fixed asset prices. They fixed the price of junk bonds, high yield bonds. You can make a pretty damn argument that they fixed the price on a lot of stocks or the floor on stocks, but now they're starting to lose it again. They're losing the narrative that we fixed the economy. They didn't fix the economy. They fixed asset prices. Now the devaluation of the dollar is fixing a higher cost of living on the people who can afford it the least at the particular point in time when they lost their job. So again, I think they've completely lost the narrative on that. Another way to look at it. All right. So again, don't just look at bond yields in isolation. Let's in the U.S. And a lot of you have this problem because of CNBC and other places. Bloomberg's less bad at it, but they don't really have. They got the like some millennial weasel like snark macro. That's not how you do it, right? You have to put it together and say what is the big trend that's actually emerged here. So when you look at bond yields, what you got to do is like look at the Swiss 10-year yield, for example. That's Anchorman. Okay, Swiss 10-year yield. We'll just do the 10-year yields, Jonesy, that matter. So it's at minus 0.58% this morning or something like that. Then you got Boons. Boons are pretty close. I think they're 0.55. Again, I don't have to look on a computer. I have to look at what I wrote down this morning. You got to study this stuff deliberately. By the way, this is wrong. This is 56 when I got up this morning. This is 54. So again, these things are chasing each other. You got the former Anchorman, which is JGBs, at 0.00. Okay? So the Europeans, what I was trying to say, Jonesy, is that they lost control. This thing has been minus 85 basis points at one point. The 10-year yield in France, where there's a bloody recession there, hence les stocks and le dog shit that is going on in France, I got a 0.23% negative interest rate in France. So they've lost control. Like how negative interest rates can go in Europe, they didn't know. But now you know. And these reference points, when you think about where the US 10-year yield is hit, when something makes lower lows, the probability of it making another lower low is high. If the conditional factor that's driving that, which is it's a recession, it's not a recovery. We went from a depression to a recession with people expecting a recovery. Again, look at the chart again on bond yields. Right on the screws when Wall Street was selling you like that's back in June. The reason why that starts on June 8th is because that's when bond yields were at 90 basis points. That's when I had new subscribers who were like, you suck on bonds and gold. And they sold their gold, they sold their bonds, they canceled their Hedgeye subscription. They're probably back watching this today saying, what the hell happened to me?